that speaks volumes to a point. Like there's always that teeter totter balance. Like, okay, um, is it in favor of the lender or the owner, right, of whatever loan it is? Mortgage rates, HELOCs, home equity lines of credit, credit cards, anything that deals with credit or anything with an interest rate. Yeah, it's kind of a back and forth to where right now when we see interest rates threatening to go up, like for us, we used it in 2020 as a way to battle inflation. Inflation probably could be going up a little bit and used towards that, but I also feel like it's a lot of things have been in the public's favor to where now the lender needs to start getting paid. Because what happens as soon as you start making money, right? And when you're discounting something, you have to bring prices back up regardless, right? To whatever they were before. So the economy was reshaping over there and in those countries that are affected by the ECB. So at this point, it's like, okay, now it needs to flop. This is where market cycles come into play. So we might see a drop on the euro at some point, but on a high level, it could just like on the monthly chart, right? If you're looking from the high level that we use, it's probably just going to be a pullback, right? But that thing could last when you're talking about the month, it could last 3 or 4 months, 5 months, or whatever it may be. So it's going to be interesting because over on this side of the pond, we have rates coming down, right? So there's multiple reasons for that. But I do see as far as euro coming, I do possibly see like some form of a pullback. I don't necessarily see it going completely bearish because our dollar is probably going to continue to fall at some point unless we see an actual war come into play, or if inflation needs to come back into play, they'll raise rates and drive it all the way up again.